Last week, I called a 1600 point bearish move on NQ, moving from like 29,850 all the way down here. Okay, it wasn't a guess, it was an analysis of market exhaustion. In this session, all right, we will be discussing how I was able to predict the bearish move on NQ last week. So let's dive in. So why did we get this move? Right? That's the question. This is what I projected from here to here. I actually posted a video on this before the market delivered, an analysis video before the market delivered. I said how why it's going to do it. So feel free to check that out as well. Yeah. So as I was saying, the why did we get this move? All right. First of all, the market was out of fuel, right? The market was running out of fuel. It was printing these bullish candles, that's true, but these candles were barely covering any ranges. Like it was really small. With a lot of candles, it was going at a very slow speed compared to the previous um, price deliveries. We look at this. Look at it here. With a few candles, we went very fast. From here to the range we're covering were phenomenal, but from here, see the density of the candles and the range was getting smaller, right? So this is market's way of saying it was running out of fuel, if you will, and it needed a setback before it continues bullish or whatnot. Okay, so that was reason number one, and we had a sell side liquidity here, and we also had these very edgy lows over here, right? Smooth edges right here. So these are like combining for our first reason that caught my first attention to actually expecting a bearish delivery. And then on Friday, the day the NFP was released, market dropped in a session. We went from here all the way down to here. Okay, so that was a crazy session on Friday that night, that morning. um, because of that, that actually triggered something. It led to that. Because of Friday, the first week of June closed with a full body candle. Like, look at here, we have a very small wick, like there is no rejection. Compare this candle with this one. Like in this one we have this large wick, right? If we had a similar kind of wick over here on this candle, we would understand something, that the market did drop but it was able to reject as well, but it actually closed with a full body candle. And if you're familiar with ICD concepts, you'll know that a full body candle, the body of the candle tells a lot of stories. For example, for instance, here, this candle closing with a full body is telling us that the market is not done delivering bearish prices. We are going to see more of it. That's reason number two. And the number three reason is that we had a left open bullish fair value gap. Again, a bullish fair value gap is sell side inefficiencies, so the market is supposed to draw in there to actually balance those sell side inefficiencies. All right, so it was pulling the market like a magnet towards it. All right, so if we connect all of that, right? If we connect all of that, the exhausting, the market running out of fuel over here, the the weekly candle closing with a, large bearish body, and we having a left open fair value gap over here, pulling the market down towards itself. Actually gave us set the narrative that we were going to see some bearish prices on the second week of June. We actually saw that. We opened up here on the second week of June, and I actually tweeted live on this. I said that this is the prices above this are the premium prices to go short, and the market actually went all the way to the bearish fair value gap on the daily time frame and actually delivered the move we expected in a single day. I didn't expect it to happen in a single day, but yes, it did happen in a single day. Down the road, we saw some bullish prices. We saw some bullish pricing towards the end of the week, and we are still witnessing it. So that was about this particular move. Right now, going ahead in the week we are going into this time, I think that everything the market is displaying right now is a sign of bullishness, right? For like the leaving a gap open here, respecting a fair value gap here, opening on a gap on the weekly and delivering bullish prices. These are all signs that is telling that the market might take out the all-time high. But there's a problem, there's an issue that is getting me the doubts, is that generally NQ is the faster one. NQ is the more aggressive than ES compared to ES. When it comes to bullish prices, NQ is seem to go faster and uh, before actually it grows aggressively and before ES faster. In simple terms, it's stronger than ES. Um, but right now, what we are seeing is that NQ has made it to this 4 hour bearish fair value gap, right? But if we see on ES, we see that we already on ES we already crossed that bearish for fair value gap. We opened with a huge gap here, open weekly gap, and we already crossed that bearish 4 hour gap here. But we didn't do that on ES NQ, right? So that actually is a concern. Why? Because ES going faster than NQ, and NQ is showing resilience not to offer bullish prices, is kind of telling that the market has unfinished business in the discount prices yet before it actually takes out the all-time highs. That's one. And another thing, another concern is this particular consolidation, this break before before the price continued again, this break right over here. Why is that important? Because if you see this whole price swing, the market started pushing bullish prices from here all the way here, then took this break and then started continuing again. If this break was taken after the market reached at this level, I mean, if this consolidation would have been here and then we would continue from there, I think that without any doubt we would easily take out the all-time high. But the fact that it took a break at the equilibrium, in fact below it, and then started continuing again, and now it's like almost at this gap, that raises some sort of concern as well. Considering these two reasons, I think we have decent chances of delivering some bearish prices at least to the weekly opening gap before continuing higher. If we do so, maybe down the road, if not, we might also see more bearish prices more than that. I mean, the market might cross the weekly opening gap and go more than that. It might happen, it might not happen. I don't know. I'm not advocating for that, but at least I firmly believe and think, based on what I'm saying, there is a high possibility of the market offering bearish prices at least to these weekly opening gap, weekly opening prices. Yeah, that's a possibility. Let's sit back and let's see how it folds out. Um, Stay tuned. I'll update the market.